Welcome to Money Matters TV. My name is Paul Mitchell. I'm a commercial banker. I am the host for this show. My co-host is John Mason. He's with an outfit called Seeking Alpha. John can tell us a little bit more what that means. I think the audience should know what a commercial banker is. We service, businesses and individuals. They're doing business. But John, tell us a little bit about what Seeking Alpha means.
Seeking Alpha is the largest blog aggregator in the world. It publishes blogs daily and it has a worldwide audience.
Wow. Well, I understand you have a financial background.
Yes, I do. I've run 3 banks, and I've worked in private equity, venture capital, angel finance, and things like that.
Wow.
I also have taught.
Uh-huh. Well, you used to have some background with the Federal Reserve too. There's been a lot going on with the Federal Reserve, not only in the last few months, but in the last 6 months, and even with some perspective of the last, I'll say 10, 20, 30 years. What is the Fed doing the last 6 months, which is different than its operation was 10, 20 years ago, John?
Well, one could hardly compare the Federal Reserve to, in my feeling, one could hardly compare the Federal Reserve today with the Federal Reserve even 15 years ago. The Great Recession just totally turned everything around. And Ben Bernanke, the chairman at the time, had to do some very radical things during the Great Recession in order to help turn the economy around. And then he got it started moving up, and did very, very unusual things. 3 rounds of quantitative easing, and basically putting a put under the stock market, if you will.
What's quantitative easing mean?
Well, they were buying, the Federal Reserve was buying a certain number of Treasury securities and then mortgage-backed securities on a regular basis, so that constantly new reserves were being provided into the banking system.
More cash, more cash. Well, doesn't usually when the more cash is pumped into the economy, you have inflation? Wasn't that the way it's been the last 50 years, kind of?
Well, that's the thing. I mean, many of us who had gone through the latter part of the 20th century, we had a great fear of inflation. And with what Mr. Bernanke was doing, we obviously thought that, man, putting all this money into the economy, this was going to result in inflation as we knew it before, and a fairly substantial inflation never came about.
Amazing. But in the 70s, we'd had substantial inflation, and mortgage interest rates were 15, 16%. Prime rate was 18%. Compared to the way loan rates have been the last several years in this country, it's just amazing. How come, after such a growth stage we've had since the Great Recession, how come inflation has not raised its head at all?
Well, let me put this in 2 parts. The first part is that there's been a great change in the economy over the last 50 years. And because of the way that the federal government and the Federal Reserve have pursued policy, that people had gotten used to inflation before 2000. They were expecting prices to go up, and consequently, they continued to bet on prices going up. This created an environment which I called credit inflation, in which when the Fed pumped money into the economy, that the people receiving the money put it into financial assets, they put it into real assets and other things like that, and it didn't go into things like physical capital expenditures, which would spur the economy on to a faster growth rate. Where did the money go? Well, I called the money going into the financial circuit, in the sense that you got inflation but in asset prices. And you had asset bubbles. In the 1990s, we had 2 or 3 cases of asset bubbles developing. And I would contend that in the period after the Great Recession, we also saw some asset bubbles forming. Even some analysts would say that the behavior of the stock market in the 10 years following the Great Recession was an asset bubble, because the primary driver of the stock prices was the underwriting of the Federal Reserve.
Well, talking about the Federal Reserve a little more, recently the government's pumping stimulus money, a couple of $1 trillion into the economy, on top of the many trillions of dollars of national debt the country already has. An issue that some years ago was like, oh my gosh, we can't keep piling debt upon debt upon debt, because if nothing else, that'll lead to terrible inflation. Your perspectives on that?
That's the feeling. That's the feeling. Again, going back to the Great Recession, I think what we saw the Federal Reserve teaching us at that time, Ben Bernanke, who was a fabulous scholar of the 1930s in the Great Recession.
Depression then.
His criticism was that in the 1930s, we didn't put enough money in to the economy in order to keep it from getting worse and worse and worse. So Bernanke, in the after 2008 and into the recovery period, was not going to err on the side of too tight money. He was going to err on the side of monetary ease, if anything. Well, I think that he was succeeded. He taught us a good lesson that this is what you do in a major downturn, is that you do err on the side of too much ease rather than constraint. And I think now that that has passed through the whole government, Federal Reserve, and Congress, and I think what you're seeing now is that people are reacting to err on the side of too much ease and too much stimulus. And as a consequence, they're not going to let it err on the other side.
So deal with the problems of huge debt later on.
But again, we're not there yet. People could always say, well, that's later. And the thing is, we don't want it to accelerate on the downside. And so as a consequence, you put all your resources in order to, the big word today is to mitigate. You put all the resources in now to mitigate the downturn and help to re-stimulate the return to an expansion.
So you have a global outlook also. So how would you compare what this country's been doing the last 6-12 months relative to other major countries around the world?
Well, it's been a funny period over the last 12 months or so. It's been a period in which for instance, central banks around the world have kind of been out of step with one another. It's always right now you seem to have the Federal Reserve, the European Central Bank, the Bank of England, and others moving toward the same direction. But a year ago or so, they were all moving in opposite directions. They were at different stages in terms of their economic expansion. There were different stages in terms of the banking system. For instance, I just wrote an article this last week in Europe. They haven't fully resolved the banking problems that they had over the last decade. So you've got all these countries moving in opposite directions over the past year, and everything was kind of going crazy because things were moving in different directions. Quite unusual.
Yep. John, we have a question from one of our viewers, Kelly Norman of Philadelphia, and I'll try to give a little bit of an answer. Maybe you might have some thoughts too. The question is this a good time to buy bank stocks?
Well, Paul, I'm really a bear in terms of the our commercial banking system at this particular time. That it is going through a dramatic change, and if anything, this pandemic has added to the troubles of the banking system.
Yeah.
Now, one of the things, the general trend here is that the banking system is shrinking in terms of number of banks. And it's not the large banks that are leaving, it is the smaller banks that are leaving. Just a couple pieces of information that on December 31st, 2019, the FDIC indicated that there were 4,750 banks that could be classified as community banks. That was down 230 banks from 1 year earlier. So
and I can say my own personal
2019, we
experience.
lost, I'm sorry.
I was going to say my own personal experience, having been a commercial banker for 30 some odd years, 3 or 4 of the banks I've been with gobbled up, disappeared, one went under. Absolutely, that's what's been happening. I can speak personally about it.
Yeah,
Good
yeah.
banks, in between banks, large banks, small banks.
So you had 230 small banks or community banks leave the banking system last year. Now, since the start of the current economic recovery period, the banking system has lost on average 200 banks a year. Over 10 years, that's 2,000 banks that have left the banking system. In the 1990s, I think you remember this, that there were 10,000 or more banks in the banking system. Well, right now, community bank wise, we got 4,750. Most of the assets in the banking system, who owns them? Well, the top 6 largest banks in the banking industry own them. And the likelihood, and let me just say, another 10 or 15% of the U.S. banking assets are held in large foreign banks.
Wow.
So
tough business.
70% of bank assets now are in what would be called larger banks. One of the reasons why this is happening, and one of the reasons one of the things that's coming out of this the current experience is because the banks are going more and more electronically. We're going to have digital finance, and as a consequence, it's going to be the big banks that are able to achieve the scale in digital technology. They're the ones that are going to continue to dominate.
Yep. FinTech, financial technology.
Exactly.
Big thing. So it seems a little dicey. One of the key caveats about any kind of answer to a question of this nature, you can't just say bank stocks. It depends what bank you're talking about.
Yeah.
So you can't just jump in and say well I want to get involved in movie business and something like that. Depends what movie it is. So you really have to do your homework. Number one.
You absolutely do.
Tough industry. It's a huge industry, and as long as interest rates also remain low, it's really tough for banks to make money because banks make money by getting a return from interest, which is more than the interest they pay. And you know if you have a savings account, you get hardly any interest these days.
Right.
The bank only gets a little bit more than that back. So it's a tough one, but contact your advisor.
The banking industry, I think the banking industry is going to reduce itself to less than 2,000 banks in the next 3 or 4 years. That is a major shift.
So do your research
more and more electronically.
Do your research and get the best banks. So
absolutely.
Here's a way other viewers can get their questions answered on Money Matters TV, and you'll see this right now.
Paul?
Yes, indeed. John.
Yes, I think we can go and introduce our new guest now.
Excellent, excellent. It's my pleasure to introduce our featured guest of the show, whose name is Doug Lubenow. He has a number of certifications, and he is the senior advisors with Lubenow Agency, which is in the insurance business. So, Doug, welcome to the show.
Thank you. Thank you, Paul. Appreciate it. Nice opportunity to be here today.
Tell us a little bit about what your certifications are. I see RHU, CLTC. Sounds very impressive.
Well, RHU is a registered health underwriter. I've been in the group health insurance business for like 30 years, and that's a designation that specializing in that. CLTC is certified in long-term care, which is another designation. For the past 12 years, I started another division called Senior Advisors that specializes in Medicare plans for people turning 65 or retiring and going on Medicare for the first time. So that's where most of my emphasis has been over the last 12 years. We still maintain group business, but spend a lot of time lobbying in Washington on all healthcare issues and also Medicare issues.
Good for you. So you suggested that there are 5 big mistakes that people make on Medicare. What's the mistake to make? If you turn 65, you get Medicare.
Well, that's a very good point. I get this phone call all the time from people. They say, what am I supposed to do? I'm turning 65. Well, are you still working? Well, yeah, I have group health insurance. Well, if you have group health insurance, if you work with a company with 20 or more employees, you can stay on your group health insurance. You don't have to sign up for Medicare at this point in time. A lot of people make the mistake and sign up for Medicare when they turn 65 and they start paying for Medicare Part B. They might be working until 68, 69, 70 years old, and they paid 4 or 5 years into Medicare and they still had group health insurance and they wasted their money because possibly their friends all tell them, oh, if you don't sign up at 65, you will be penalized at a later date. As long as you've had group health insurance and you just prove it to Social Security with a 1-page form that your employer fills out and you send it in at 70 years old, you can get your Part B for the first time at age 70 when you lose your group health insurance. So that's one of the big mistakes people make. They don't know when they're supposed to sign up.
I thought Medicare was the cheapest insurance you could possibly get.
Well, there again could be a misunderstanding. It all depends upon your income bracket. People in the higher income bracket are paying as much as $550 a month just to be on Medicare.
Yeah.
If you're over $326,000, you're at the $533 a month bracket. Husband and wife, you're over $1,000 a month just to have basic Medicare, and then you have to get a supplement and drug card. Now the base, 89% of people only pay $144.60 a month for Medicare. So for those people, it's fabulous insurance to have Medicare, a Medicare supplement, a prescription drug card. You can use it any place in the country if you have basic Medicare. It's great insurance.
Yeah. Wow, that's a lot more complex than I thought. I thought that was the freebie. Everybody on Medicare, people are talking about, So it's not necessarily the best thing since sliced bread.
But people call assuming that until they get the bill from Social Security saying that based on your income from 2018, you're going to be billed $533 a month just for your Part B Medicare.
Yeah. Well, fortunately, I guess I didn't make that much money, so I pay a lot less.
Well, and most people pay $144.60 a month this year, and that gets adjusted every year.
Yeah.
One of the other big mistakes is people don't understand, when they how to get the right drug card. There's 27 different drug cards in every state, and if you don't actually know how to go into the system and look for the best drug card, there's a Medicare tool that we use. Our clients send us their drug list. We go on the system. And drug cards run from $13 a month all the way up to like $149 a month, because each drug card covers different drugs and the formularies are different.
Yeah. And how about these free cards? How about these free cards I see, even in the doctor's office? Pick up this brochure for a free drug card. You'll save 80%.
Well, it's a discount card. It's only a discount card. If you don't have a drug card, a Part D, D as in David, Part D drug card, you will be fined by the federal government at a later date and penalized for not having a drug card. So when you first become involved with Medicare, you do need to have a basic prescription drug card. Even if you don't take prescriptions, get a $15 drug card just to protect yourself So you don't
15 a
get
month.
penalized. You could change your drug card once a year,
Uh-huh.
October 15th to December 7th. You can always change it and get a different drug card if your prescriptions should change.
Wow. So the differences between the Medicare supplement and Medicare Advantage, I know that gets complicated because it sounds kind of like the same and all this marketing stuff. Wow, how do you wade through it?
Yeah, the insurance companies spend a lot of money in the fourth quarter because that's the time of year you can sign up for a Medicare Advantage. Medicare Advantage plans, you're basically buying strictly, you're going to an insurance company, a major insurance company, Blue
Mhm.
Cross and Aetna, and now you're getting your insurance through them. They are managing your care. They get money from the federal government to manage your care and pay all your medical expenses. So you do have to stay in network. You have to stay in the network of the Aetna or Blue Cross as an example. Sometimes you need to get referrals, and you do have out-of-pocket exposure. You have co-pays at everything you do, doctors, tests. Hospitals are about $300 a day if you go to the hospital. The biggest out-of-pocket is things like chemotherapy, where you have to pay 20% of the cost of chemotherapy. Now, people don't understand that, and they don't read their policies, and when they do get sick, and the maximum out of pocket is $6,700 a year on those plans. The plans could be zero premiums. It could be $39, $49, $59 a month.
I've seen
They're a
that
lot less
advertised.
expensive, but you have a lot more exposure. And I tell people you're making a lifetime decision if you buy this Medicare Advantage, because if you do get sick, you'll never get through medical underwriting to be able to get a Medicare supplement at a later date. Now, regular supplement coordinates with basic Medicare. So you would keep your Medicare card in that, and the supplement picks up to 20%, and the deductibles not covered by Medicare. So you're almost 100% covered for all medical expenses.
So let's just review again. You say Medicare, then supplement. So Medicare is A, which is hospital, B, which is doctor visits.
B is everything that takes place outside the hospital. So it's all your
Okay.
doctors, all your tests, your labs, expensive items, MRIs, CAT scans,
Yeah,
chemotherapy, infusion therapies
Yeah.
are all covered. And your Medicare only covers 80% of those things. So when you get into things like chemotherapy, if you don't have a Medicare supplement to pick up the other 20%, you'd be paying 20% forever of things like chemotherapy, infusion therapies
Yeah.
that could be 10, 20,000 a month.
Yeah, and then D is the drug. So supplement just means after A and after B, you have a
Correct. Well, it's
supplement,
supplements
and you
are
have D.
they're called Medigap or Medicare supplements. It
Yeah.
picks up the 20% not covered by basic Medicare, and the deductible is not covered by Medicare. And Medicare supplements are designed by the federal government. So people have to understand that you see AARP advertised all the time, which is United
Sure.
Healthcare. Well, their AARP supplement is the exact same as all the insurance companies that sell Medicare supplements, because a Plan F, a Plan G,
Yeah,
a Plan
all those
N are
letters
designed
down.
by the federal government.
Whatever happened to Medicare C? What was that?
Well, Medicare Part C is the Medicare Advantage plan, right? There is a
Oh.
Medicare supplement called Plan C, but Part C is the name of Medicare Advantage plans by the federal government.
How about that? So one of the other, I think, mistakes you mentioned was listening to friends and relatives getting bad advice. Now, I would think that'd be good advice if they've gone through the Medicare process themselves or speaking from experience.
Paul, this happens all the time. I meet with somebody and they say, I want this plan. I said, why do you want that drug card? Because my sister has it.
Yeah.
Well, how do you know it's going to be good for you? So I do the analysis and I say, the best drug card for you is a Medicare card with Cigna, Mutual of Omaha. Well, my sister has a United Healthcare drug card. I said, well, you could have that drug card. It's going to cost you $3,000 more a year because your drug that you're on is not covered by that drug card. So do you really want to go on that drug card because your sister has that drug card? Or they say, I want this supplement. Why? My sister has it. Or my best friend. Oh, you got to do this. You got to do that.
Yeah.
You do the analysis and say, well, you can do everything, and then it'll cost you about $4,000 more a year because you picked the wrong plan and the wrong drug card.
Yeah.
So that's
At least
why,
At least I wouldn't take advice from my son.
right.
He hasn't gotten there yet.
Well, everybody thinks they're an expert, and I really advise people, if you're going to do business with somebody that specializes in this field, because I tell other insurance agents, they refer their clients to me because they don't want to specialize in it. You could hurt somebody if you give them the wrong advice.
Oh, sure. Here's a question, if a little sensitive to it, but I always scratch my head. So how do you make a buck out of it? I mean, most people, I'll say, maybe don't go through a Medicare insurance agent. They go on their own, and you have a business that you make money doing it somehow. Who pays you?
The insurance companies pay us. We just write their policies. It's the same price as if you
Oh.
went directly to them, and they pay us just like if I wrote you a life insurance policy or any other insurance. The insurance companies pay us a commission for writing business for them, and we represent all the major insurance companies in the Medicare world, all the supplemental carriers. So we don't preference any one carrier. We're licensed in 26 states. Up and down the East Coast and out west and stuff, we have contracts.
So I
Paul,
mean,
let me just jump in here a minute because
Sure, John.
it seems like we only got about a minute or two left in here. Doug, do you see any changes to the system because of what we're going through right now?
Well, I have read several notices that the insurance companies are all very concerned about their costs this year and how expensive they're projecting the future might be for all health insurance, as well as Medicare plans because of the COVID situation. It's pretty scary. They're suggesting higher increases than normal next year on health insurance and also some Medicare supplemental plans. So that potentially could be coming down the road. Yes, there could be some more expensive health insurance next year.
I think the government should step in again and save us all one more time.
Right.
That's just
Paul,
my
I think I see the clock. We're just about there.
Okay.
So, has
Great.
Doug got anything to close with?
Doug, last piece of advice?
No, basically, just as I said before, if you're going to deal with somebody in this Medicare world, make sure you deal with somebody that specializes in it. And it's a main part of their business, not somebody that just tinkers in it.
Right. Good. Seek an expert advice. Always
Thank you. Yes.
something I like to promote. Great.
Yep.
Thank you very much, Doug.
Thank you. Appreciate it.
Thanks, Don.
So that kind of winds up our show though, this time. I do want to introduce who our next guest will be. That's Chris Tabakin, President and CEO of IHI International. Sounds very interesting. So that ends our show. I just want to keep this thought in your mind. Remember that on this show, your money matters.
Okay, guys, that's a wrap.
Okay.
All right.
I'm sorry for jumping in there, Paul. I got the feeling you weren't getting the time.
I didn't. You're right. Thank you.
Okay.
I
Thanks.
see the private chat. Last thing Tim Milway said was good.
You couldn't see your chat?
You said good. You can start.
He said
He
introduce
said good.
yourself. He said now.
Oh, I didn't see the bottom ones. Oh, I see. I didn't scroll down. 12 minutes left.
All right. Well, good thing John jumped in there.
We're a team,
Absolutely.
Paul.
Thanks, John.
We're a
I'd
team.
still be waiting backstage to jump in, John. Thank you.
We're a team.
All right, guys. I'm glad we got this experiment through, and yeah, we'll see how it all turns out.
Oh, you should be all set for the next show now.
Oh, it should be all set for the next show.
Hang around, John. You got to be my advisor.
Thank you very
All
much.
right, guys, I get paid extra if I stay around.
Buy an extra beer.